Welcome back, everyone, to another Market Open live stream. So today we should be getting an update on margin data. We'll see what's going on and see if people are actually paying off debt like we think they're taking on more debt. It'll be kind of interesting. We've also got a few headlines from Bloomberg that I thought were interesting. One is financial markets in Asia are taking the brunt of risk assessment by investors as COVID-19 cases surge in the region. This is interesting, particularly India reporting more than 2,000 deaths on Wednesday, and Japan moving towards maybe declaring a state of emergency. While investors expect the market or expect high vaccination rates to avoid the worst, global reflation trading has paused for now, which is, it's so weird to see these like frequent rotations that we have in the market. It's almost like you have a rotation towards this, and then as soon as that rotation gets going, you start having a rotation that way, and then you rotation this way. It's a bizarro market, and I don't know. Then you've also got, let's see, another headline here was Google and Apple facing another antitrust committee hearing in Congress today. And then you have JP Morgan bagging on Bitcoin, actually, suggesting that if Bitcoin doesn't break back above 60,000 soon, quote, momentum signals for the digital asset will collapse. The largest cryptocurrency is trading for around 55K this morning, still not having made a full recovery from Sunday's plunge, despite the move lower, blah, blah, blah. Okay, whatever. So JP Morgan's just being a little weenie baby as usual. Yeah, okay. So let's take a look and see what is going on in the madness of the market. I will say it looks, I mean, to me, I still think this slow bleed is going to be here to stay for really until well, here's what you need for the slow bleed to stop. The pandemic to officially be looking up and up in countries around the world, especially where supply chains are, where valuable materials come from, just everywhere. So the pandemic's got to look up and up everywhere in a good way. And then you need people to chill the F out about inflation. And the only way that's actually going to happen is if inflation starts trending down. So I think it's going to be a while. It's going to be some more crap, basically. So you've got Netflix down 7.6%. Not as bad as the 10 to 11% that it was down in the aftermarket yesterday. Marathon down again along with Riot. I mean, these guys just it's like somebody started a fire on them in Minecraft, and you're just like, until you pour water on them, they're just gonna end up burning out like zombies at this point. It's just every day, it's day after day, it's red on these guys. It's rough. It's really rough. We got Givo, and another thing I'm noticing is after this Netflix data, a lot of the other subscription services are burning a little bit as well. As people expect, oh no, well, if Netflix subscriptions are down, maybe that means Peloton subscriptions are going to be down, or Disney subscriptions are going to be down, or whatever. We'll see. Tesla down 1.34 as well. No huge sign of a crazy sell-off this morning, at least. I mean, American Airlines, for example, was down substantially yesterday, and so were the other airlines. I mean, as much as 9% in some cases for some of the airlines. But definitely, we've been noticing this for a couple weeks now. You see this like merger of like tech and the recovery stocks kind of trading together in a weird way. It's bizarre. Let's see. We'll go to the top side here. Let's go to the top. Netflix now accelerating to 8%. Fisker, Zom, and CRISPR. These guys moving up here. Fisker had sold all the way, I mean, down to some crazy low levels. Let's just go ahead and pull how low. Where did it go? Let's go to like the 4-hour chart here and we'll see it. Yeah, so Fisker fell to 1223 was the low. It's been running the last couple days. I'll tell you that, I don't know, there hasn't been much to celebrate over at Fisker. Sure, it went up 4% yesterday and 4% now in the pre-market, but boy, oh boy, woo, there's some pain over there in Fisker. Carol's Rest, 2.5%, CRISPR, 2%. And these are all in the positives here. Steel Dynamics up a little bit. That's really it for the well, let's see. Let's go. Oh, there we go. No, not positions. All stocks. Watch list. That's right. Okay. So yeah, Fisker's moving. I'll go to the 1 minute over here. Let's take a peek at the 1 minute. Yeah. Okay, a little bit of a sharper green candle here at the moment, but we'll see how this ends up going. So I'd say a lot of the market right now is somewhere between that negative 1% and positive 1%, with really not much craziness going on in the extremes. Let's go ahead and see what the good old TV folks have to say within 4 minutes prior to the opening bell. Never mind, they have nothing to say because they're both on commercial. That's really lame. So anyway, let's go ahead and see if we can try to pull up FINRA margin data. FINRA margins, they're supposed to come out today. Whoa, they they actually still ticked up. That's crazy. So the data just came out. I was really expecting a decline here. We certainly have seen the rate of growth slow consistently. This has been slowing down consistently, margin growth. I mean, we used to grow like, I mean, look at this. We were growing in some months last year when we look at the 20s. We were growing over here, $25 billion, $32 billion, another 30-something, another 30-something billion. We were consistently growing at $30 billion a month. I mean, from November to December, we grew $56 billion. We grew almost $70 billion between October and November. It's nuts. And you really get to this slowdown here in Jan, where all of a sudden you only grow $20 billion. Then you only grow about, what is that, $15 billion? We only grew $9 billion now. I was really hoping to see this go to the negative side a little faster, because I think as we start seeing a deleveraging, the faster we see that deleveraging, the faster maybe the bleeding stops. Instead, we're just still seeing a slowing in the rate. So we're still slowing, so decelerating, but not going backwards yet. Still hitting the brake, so to speak. Gaining $9 billion in margin debt. Probably, I'd say that's the lowest amount of margin debt we've gained really at any point in the last year and a bit during the pandemic. That's a pretty low gain in margin, but again, still not going backwards. So definitely fascinatingly interesting that we're, I mean, we're on the decelerating trend, but the fact that we're not seeing a reversal yet does surprise me. I thought we would have seen that sooner by now. Let's listen into Varnes.
Opening up the economy is not the solution. What is the solution?
Well, look, Stuart, the real answer here is we have to stop spending. And the reason that we keep spending is simple. What's been the consequences of us spending this way? We're at 30 trillion and counting of national debt. But if not for the pandemic, the economy was booming. Everything was going along just fine. So no one is feeling the pain, especially those in Washington, D.C. So keep spending. Joe Biden says this spending packages, they're really popular. So that's only encouraging more spending.
So your solution is political. You got to get the Republicans to reject all this extra spending and bring us back to reality. That is the solution, isn't it? It's politics.
The solution is, truly, Stuart, we have to start demanding the truth. When you start calling this spending spree the American Families Plan, the American Jobs Plan, those names sound very appealing. Who's not for families? Who's not for jobs?
Wait a minute.
The truth of the matter is it should be called Spend Us Into Oblivion Plan.
So we're going to pull off this for a moment. Very impassioned argument. I love impassioned arguments, whether you agree or disagree. You got to give him credit for the passion. All right, let's get to the bell. All right, but yeah, Biden's kind of been walking back some of his talk lately,
this out. But it's once again
indicating more that he's willing to compromise than ever lately.
How is that possible?
Excellent question, guys. We're definitely wrestling with that one as we are in this sea change here. There's the opening bell on the CNBC Real-Time Exchange. At the big board, it's UiPath, maker of software for automation systems. The founder and CEO, Daniel Dinez, will be our guest on Tech Check at 11 a.m. Eastern.
Can we get a double open if we do this? Oh, no. Darn. Yeah, it looks like Bloomberg TV is tiny little bit behind.
In the last couple of weeks.
It reminds me of
A name that they
Netflix.
say is very much leveraged to corporate travel and, of course, long haul international.
Right. It reminds me of Netflix, and it was a really bad call, UAL. I mean, it was just bad. And we'll hear from Gary Kelly tomorrow, Southwest. But everyone, I think one of the things that happened yesterday, Carl, as you correctly pointed out, is United Airlines had a bad quarter, and people are starting to talk about maybe things aren't going to be as robust. I think they're not as robust at United Airlines. And I think that others are doing better. We heard from Delta last week, and I thought Delta was encouraging. I think we're going to hear, when we hear from Gary Kelly, I think he's going to say happy days are here again. I really do.
Though I keep coming back to business travel in terms of trying to assess the long-term profitability of the airlines, the importance of business travel can't be understated.
No,
Jim.
it can't be.
And we just don't know. I mean, I am hearing people are getting back on airplanes to some extent, but then I also hear things, Pfizer not letting anybody travel this year.
Pfizer?
Yeah.
But they're that confident in their competitive drugs?
I mean, I
that they're
don't know.
not going to send reps out?
And by the way,
detail reps?
who can get anybody vaccinated more than them, right? I mean, and boosters.
Why
There
All
are
right,
a
we're
lot
going
of
to pull
companies
back
that
off the vaccine conversation there. Welcome, Spencer. Thank you for joining. Welcome. No compromise, says Maurice. We need 100,000 EV charging stations and a $5,000 federal EV credit. I think the market was expecting a lot of that. And it's fascinating to me that Biden divided his infrastructure pitch into two parts. Pitching first the $2.25 trillion, suggesting that the $1.75 trillion will come later, and that he would announce it in 2 weeks. We haven't heard anything about that second plan. And I wonder if it's because, they kind of tested the waters on the first package, and maybe they got a lot of sort of negative reception. And now Biden's talking about compromising on the 2.5 or the 2.25. So it's sort of a softening in the entire position on infrastructure spending is at least what it seems like. We'll see, but that's certainly the feeling that I'm getting. I don't know. Maybe let me know what you think. But hey, let's go back to the charts here. See what's how things are happening now that they are opening up again. All right, folks. So what do we got here? We got Fisker down 3%. Fisker up 3%. Fisker not doing anywhere near as well as it was in the pre-market. It is red candlesticking pretty hard here. We got Ethereum up 4.2%. Norwegian Cruise Line, Upstart 1.5 ish percent, bobbing around here. Not a lot of green today. I mean, this is it's a pretty pathetic morning here because there's like nothing in the green. With the and the things that are green, I mean, we're talking nominally green. CRISPR's up 0.05%. It was up like 3% in the pre-market. What happened? Well, babies. Tootsie Rolls up 0.8%. Yay. Upstart's at $92. 92. It flew past 100. Bed Bath & Beyond's up 1.6. Ethereum, Moderna's up 4%. Fisker's trying to recover. Moderna's actually taken off here for some reason. Honestly, I kind of want to see why. mRNA. Oh, yeah, gotta get rid of that one fourth. mRNA. Let's see what's going on with mRNA. Really excited about these companies long run, Pfizer and Moderna. I'm just waiting for them to decelerate and really sell off after the whole vaccine push, but it's going to be a while. Then I want to own those companies. So let's see. Do we have a reason for this? Maybe cases going up. That sounds terrible, but honestly, it could just be because cases are going up in certain areas around the world. And you're like, oh, well, we're going to need that vaccine for longer. You're going to need some more of them booster shots. But then we get to the red. La la la. So what do we got over here? Everything's going down. Netflix is trying to go a little green here at the open. Obviously down 7.5% here during the opening hours. Feels pretty volatile right now. We got Marathon down 4.5%. It's the next big loser here. Coinbase down again. Where's this darn thing? There it is. Okay, I can't pay attention when it moves so much. Oh, Coinbase is at 309. Woo! That shot right past that 315. That would be an interesting little opportunity there. I don't know. Do you wait for 200 or do you grab a little bit more now? You've got Peloton sitting at 103. I think Peloton is having a rough start to the week here, mostly because you had bad news this weekend with the advisory, basically to stop using the treadmill. I mean, that's crap. You don't want the federal government calling your machine a cookie monster. They didn't, but that was my reference to it. And then you've got Netflix selling off with subscriptions. Obviously, a punch in the face to Peloton. The SPACs are selling off like nutso. I think the SPAC sell-off could continue. I do plan on picking up some as the SPAC sell-off continues, which I think it's if it hasn't already gotten to the overblown level, I think it's at the overblown level. But as we expect this bleed to continue, I'm planning on picking up some. We get to CCIV 15 or like Matterport sub 10. It's time for some more long calls, in my opinion, on these things, because it's just getting to the level of ridiculousness. We've got Airbnb down 2.18%. We've got Tesla's also down 2.2%. Odd Tesla being down, given the good news that came after the accident, that autopilot was not on, the car did not actually burn for 4 hours. Nope, market didn't care. Still selling off. You got TTCF down almost 1.9%. Yeah, 1.93% here. United States oil's down. I'm pretty sure we've got treasury yields up a bit as well today. We got Lemonade. It almost seems like the market's accelerating towards the down direction again. I see it feels like we're getting more red candlesticks at least. Yeah, Pinterest, some more red candlesticks here, about to drop below 70 again. Clover's, where's Clover? I just saw Clover. Sometimes right when the market opens, this stuff moves so darn fast. I could turn that updating off so it doesn't update as frequently, but this is also kind of fun. They've even got and look at that. XL Fleet is at 593. I mean, it's just the bleed just continues and continues. It's crazy. Do we have green? Yeah. See, Fisker just disappeared. Fisker's only up 1.78% now. GameStop's up 1.8%, 1.2% now. GameStop coming up. Upstart 2, Microvision's coming up a little bit, but it's still sitting at $10. Far cry from where it was. Norwegian up 366. I don't know why Norwegian's moving like this. Maybe it's because the airlines are getting beat. People are like, oh, well, then let's buy cruise lines. Well, come on, folks. Most people need to fly to get to the ports. Most people gotta fly. Oh, yeah. So, let's see here. All right, SPAC fallout continues. Let's listen to it.
You did the first interview here,
okay,
and we focused on the company at that point.
But
and then
Carl,
you took him, as you always do, and now made him your guest.
Yes. But Carl, he came on the show last Friday, came on mad. The stock's now down 64%. There was a short seller basically saying that the thing is a fraud. And I don't think it's a fraud, but the problem was people got more excited about his data than even he was. And Carl, these SPACs have forecasts. And the forecasts are so fabulous that you almost feel compelled.
How many times on this channel have I said, do not listen to those stupid forecast PDFs? And now all of a sudden it's coming out.
Fact, I haven't seen that stock below 18 in quite some time, 1782.
No. There's a commercial.
Chamath Palihapitiya's Clover Health, which of course is de-SPAC. That has been a very poor performer, although he did put his performance out on Twitter, I think it was yesterday, claiming, of course, things have been quite strong. And it's true. If you invested with him at the right time and sold at the right time, you would have done fine. ACIC, Flying Cars, Atlas Crest, that's at 989. I mean, you can go on and on here, Jim.
The Flying Cars you really are. That was the one.
I like to say Flying Cars. They're not, of course.
Did ARC
air taxis?
ARC's in that one.
I think they are. Yeah, ARC's in that one. That's Moelis. Yeah. Jim, you want to talk railways a little bit?
Oh, my God. David, I've been thinking, if you're not going to talk about Canadian Pacific, then I don't even want you as my partner.
I figured I'd do it as a favor report, even though you can be part of it if you want to be. Did you see this morning? The news we got this morning is that CN, of course, Canadian National, does come out and.
All right, I like that. I like this fact talk, but we're gonna pull off for the other news here. I'm gonna do a quick look here on. Let's see. It's a 5G company. I don't know much about this. Ericsson, something to that effect. And let me take a quick peek here. So Eric Erickson, CEO, very optimistic about Q2. It seems like a lot of 5G folks are really excited about Q2, talking about blowout margins, profitability, and it sounds great. I actually don't even have the earnings up. I'm just looking at some of the comments here from the CEO. Let's see. Q1 earnings rise, net sales flat though, but the margin went up. EPS of 0.96 versus 0.65. 5G plays. Apple, in some sense, Apple, Qualcomm, 5G plays, right? So potentially a little bit of a heads up for 5G plays. A lot of optimism with that report. Just briefly, I don't know much about the company, so we're not going to go deep into it. But what else is going on here? So is GameStop going to actually move here, or is it just a fake out? No, I mean, looks like it's trying to push here. We got volume increasing, not bad. How's our Doge doing? Let's take a peek at the Doge. Doge is at 32. It's actually holding not bad. The sell-off could have been a lot worse on Doge, and it hasn't been. That's very good. This is the 2-hour chart here, so you could really see the last 5 days condensed here. Trend data has just been in the toilet for Doge, but still it's maintaining that position above that above a quarter. Somewhere between that 29 to 32 cents. Still an incredible run from where it was at the 10-cent levels, the 5-cent levels where it was not too long ago, or even below that. Very, very incredible. All right, what else we got here? So let's see here. Let's listen in to see what we got on the Barnes.
Now, last week, Bank of America noted that last week we saw outflows for the first time out of stock markets since mid-February. We lost about $5.2 billion. People were taking out their money. And some people had said that maybe retail investors, those stuck at home with their stimulus checks, were not that interested in the stock market.
Why do they always gotta refer to us as being stuck at home? Maybe we're not stuck at home.
We're coming out of the institutional funds, the pros, the pension funds, etc. Now, Bank of America says that those individual investors, they're still in it. But concerning, though, because this is the largest outflow of cash out of the stock market since November, and also the 5th largest in history.
Is the implication that the big guys are out taking their money, leaving the little guy holding the bag? Is that the implication?
Well, the implication is that maybe they think that they've made their gains for the year. Remember the sell in May and go away? Maybe the institutionals are looking at that type of process and habit once again. I will point this out, though. What's been popular amongst individual investors have been the single stock call options. That volume has gone down, according to Deutsche Bank. So maybe there isn't as much interest from the retail crowd, but they're still in it, whereas the institutionals are actually selling and pulling their money.
All right, fair point. Thank you, Susan. Now this, AP reports that the Justice Department is getting ready to probe the policing practices in Minneapolis.
So we got Thomas here in the chat talking about how the Tesla windows, because we talked about those over the last few days, about how maybe the person was in the back seat because they were trying to break a window or escape. Thomas here mentions that first responder manuals indicate that a lot of Tesla's glass on the sides even is laminated safety glass, which is a lot harder to break out of than tempered glass. So it makes you wonder: is it? Are they maybe going to have to change the glass to tempered on the sides and back and the Tesla just to make it easier to get out? I feel like this kind of calls for like a Tesla YouTube video where we purposely try to break out of the Tesla if we're stuck. That would be probably expensive, but it would be entertaining. And I don't know, should we do it? break all the windows in my Tesla. It's probably really stupid.
2022, just ask Procter & Gamble, Coca-Cola, Home Depot, etc. Then the mega caps, they have the profit margins to really be aggressive and keep prices low and gain more market share against weaker players in the industry. So I think mega caps will be an excellent inflation play as well.
A growing list of companies, retailers passing on higher prices to consumers as cost pressures build. The Coca-Cola CFO expecting an inflation pickup in 2022, saying the following: "We think it's manageable this year. It's really a challenge for next year." For more, let's bring in Bloomberg's Kaylee Lydes. Hey, Kaylee.
Hey, John. Well, it's not just Coca-Cola. Procter & Gamble yesterday raising prices on a number of goods due to higher commodity costs. And of course, it's not just Procter & Gamble and Coca-Cola. As you said, a growing list of companies, specifically in the consumer goods sector, are facing this problem. And that is one of the reasons why consumer staples is the big underperformer within the S&P 500 on a year-to-date basis. That sector only up about 3%, lagging the broader market as it is more sensitive to inflation. While on the other side of the coin, energy is up 24%, boosted by those higher commodity prices. And just to be clear on what I mean by higher prices, we have seen a massive move in some of these cyclical commodities. Lumber futures up 78% so far in 2021, and April isn't even over yet. Hogs, gasoline, tin, all up by 30% or more over the same period. And what all of that equates to is higher input costs. That could translate into margin pressure for these companies if they are unsuccessful in pushing those costs onto the consumers. That's one part of the equation, that corporate profit story. The other part is what happens if they are successful in pushing those costs on, and that is broader inflation. To this point, the boom we've seen in commodity prices has not tracked with consumer price inflation. Right. It is far exceeding it. But if, John, companies are successful in exercising that pricing power, that is where we could see CPI starting to pick up, John.
Katie, thank you. It's a theme that's emerging. We've heard it from Kimberly-Clark. We've heard it from Procter & Gamble. We've heard it from Coca-Cola. Let's have that conversation right now with Kristen Bidley of Citigroup and Tom Titsouris of Strategas. Tom, I want to start with you.
It's very true. If companies can actually start pricing in these higher prices, yeah, you're going to see consumer prices go up.
Yeah, well, very closely. And really what the feedback from corporate CEOs is telling us is that they believe they have pricing power. That is, they look at the consumer pipeline and they see the price pressures on their producer side, on their corporate side, and they're saying, look, we think we finally have some pricing power. And that confidence in and of itself is a direct change from what we've seen in the last decade. So that's very important. And we look to those comments because that confidence is very important to us.
Kristen, are you focused on the same thing? Because we had many people come on this program recently say pricing power, pricing power, pricing power. We want a position for those companies. Are you doing the same?
Absolutely. And this is why we're looking very, very closely at earnings and fundamentals. This whole discussion around input pricing and the ability to then basically give that to the consumer, right? So to be able to pull that out to the consumer, we haven't seen that yet in terms of pricing power, but given all of the concerns around inflation, that's really what we're expecting in the second half of the year. And then it goes back to, from a portfolio positioning standpoint, where do you invest if you're worried about those rising costs ultimately?
Where do you invest though, Kristen? Just give me some details where you would go.
So what we're doing, yeah, absolutely. So this is where it's really tricky, right? Because it's not like there's a great place to hide within fixed income markets, within equity markets at the current level. So one of the areas that we've been looking at are those areas that both from a valuation standpoint, free cash flow generation standpoint, that are actually quite positive in this market. So we're looking outside the US, and there's markets, for example, like the UK, like the Eurozone, where you don't have that mean reversion priced in, you don't have that COVID recovery. From a PE multiple standpoint, actually quite attractive. And from a dividend yield standpoint, you're looking at about 3 to 4% in some of these, with some of these companies and in some of these regions. So when you're trying to bridge that gap, when duration can be punitive, when cash can be punitive in an inflationary environment, we're actually looking outside the US at those high free cash flow generating, high dividend paying companies.
Tom, Kristen going through the equity side of things, doing a wonderful job of exactly that. Can you walk me through the fixed income side of things, how you would express this through fixed income right now?
Yeah, there's not a lot of places to hide in fixed income if you're looking at a rise in inflation. The best you can do is kind of hope to, we'll call it, clip your coupon and avoid any sort of further selling or losses from duration risk. So that means you got to shorten your duration, move down the curve on investment grade. We still like, and we've always liked short duration investment grade corporates. We'll say an A- rated 2-year to 3-year piece of paper still performs reasonably well in that environment. but you got to supplement that with a little bit of lower quality credit, but you can't take on too much duration. So what that means is bank loans, leveraged loans. And now we go back to an earlier point I made about this being close to a Goldilocks credit environment. And I don't want to overstate that, because there's always risk on the horizon. But nonetheless, bank loans should, from a credit standpoint, should also perform well in this environment. And you also have rising rate exposure because of floating rate exposure there.
Tom, it's good to catch up. It's good to see you. Tom Tsouras there, a strategist, and Kristen Bidley.
You really hear this with the suits just regularly complaining about being worried about the inflation coming, and hey, they're pricing it in for sure. That's why we're seeing the sell pressure, in my opinion.
With the mega cap tech sectors. If we go into the Bloomberg terminal and take a look at what's happening, moments ago, most sectors were red. Now we have most sectors green. So traders are really jockeying for position here, trying to bring stocks higher, buy the dip that we have had over the last couple of days. The top sector at this point, materials, followed by consumer staples, both of those, healthcare, then consumer staples, all of those sectors up by more than 0.5%. But I was mentioning the mega caps. Not so long ago, you had tech and consumer discretionary.
We're going to pull off that for a moment. Yeah. So, I see a lot of you actually really interested in the window idea. So it'd be interesting. We'd have to experiment with that. We have to do like one window with the elbow, one with the foot, one with like one of those glass break things, and all in the Tesla. It sounds like a very bad idea for purposes of not having like a dump car. But anyway, where were we? So great commentary here on inflation. Not a surprise that the weenie baby suits are complaining about inflation coming, and we're seeing that inflation. The inflation's here. It's just the question is how long is it going to stay? We do have Tesla needs an ejector. Ejector. Look at Playboy actually running here again. Playboy having a nice little run. One with Thor's hammer. Yeah. No kidding. Yeah, the salvage. The problem with the salvage Tesla is the glass could be weakened, right? In all honesty, if you have a Tesla that's salvaged, it probably already has compromised glass. I don't know that it would be as fair. But I don't know. I suppose it would depend on the circumstances. Anyway, Norwegian moving nicely here. Norwegian Playboy. Okay. What is this going to have? Be like a Playboy cruise here? The Playboy cruise is doing well. We got IPOE at 1534, actually turning green here with Nordstrom. Both these guys having sold off a bit here. Nordstrom 36. I feel like this used to be higher. How high did this go? 46. Okay, yeah, that's about right. We had a brief run there to 46. CRISPR moving up again. CRISPR going up to that 2.65%. So we're getting a little bit of a recovery here in some of the sticks. Got Gevo, very good food company. Great CEO, by the way. Dave & Buster's back, going back towards that 45. So really showing maybe that American reflation trade here to stay, even though the international might be a little bit more pained. Palantir's positive. Oh my goodness. What kind of day is this, folks? Break out the shots. Palantir is positive. It is almost above 22 again, and as I speak, it is falling. No, it's at about 1% up. Wow, Spirit Airlines all of a sudden's up 0.6%. Good. Bitcoin sitting at 55.5, following JP Morgan bagging on the thing, saying all technicals fall apart if this thing does not move above 60 again soon. You've got a lot of movement here at the lower level. Let's see how the pain side is doing. You've got big digital assets continuing its sell-off over here. You've got Coinbase at 311, Clover, Voyager selling off about 4.5%, Netflix 7.2, big digital getting wrecked here, down 15%. Then you've got the SPAC attack again, Matterport, Hyliion, XL Fleet, Churchill, Tattooed Chef, ChargePoint, all of these guys down again, another 2.5 to 3%. Tesla recovering. Tesla was down as much as 2.5% a few minutes after the open. down to 698. It's presently back to 708, down just 1.5%. Seems like the market is trying to recover a little bit from the lows that we've experienced in just the last 10 minutes. We've got Alphabet up about 0.7. I'm sorry, Alphabet down 0.7, down. Apple down just over 0.5%. Yeah. All right. So what's the scoop over here?
Transition going on. Craig Smith's stepping away. He's the CFO of Boeing. He's going to be there for a little bit, but CFO who was an operational CFO, Greg, which is a very highly unusual. He will be replaced by more of a strict CFO. The thing that Greg is known for, besides just having a tremendous grip on things, is he did say, listen, we don't need to sell equity. Maybe a traditional CFO would be more willing to sell equity, but that's why the stock went down 10 yesterday. And
Terry says, do not break the windows of your car. Get Graham to break his instead.
In the camp that you can own Boeing.
Yeah, they made a couple of comments. No dividend reinstatement in the near term, and positive cash flow in the medium term. Jim, we'll see what happens.
We
over
need
there.
China.
So you got a, yeah. You got a big show tonight.
Yeah, we got three companies that are all blew out numbers. PPG, which is of course coatings, not glass anymore. The PPG coatings.
Okay, we're gonna jump on over. Let's see what's on
really can figure
Barnes.
out what you need to do.
Hold on, I want to quickly see what the last company is. I actually don't know these companies. Marvell. Okay. All right, let's pop. So what's Varnes got? Nothing. Varnes got nothing to say because it's not a commercial. All righty then. Let's go take a peek at the good old Bloomberg. So let's see what Bloomberg has for us this morning. All right. Well, I don't know what I did with my Bloomberg tab. Oh well. We will wait for a moment while we get the Bloomberg Live video up. Let's see, Bloomberg Live. And Bloomberg Live TV up again. Do I not have it? No, I have it up somewhere.
What surprises tonight is
genuinely because my hearing.
See, it sounds like it's on commercial too. See, this is the problem. If you have too many tabs open, you just don't know what's going on anymore. Found it. Okay, cool. There we go. Comes back. Love their snazzy jazzy.
Asia is absolutely core to our business.
While we wait for the Bloomberg commercial, take a peek at this. We got the Safe Moon. Safe Moon is U-turning. It had been running since Friday. The darn thing since Friday. I don't know anything about this one. I just mentioned it in sort of passing here. I think it was at like 2 on Friday. Thing ran up to all the way to 12, 13, 14 there at peak. Yesterday, 420 day. It seems like what really had 420 day was Safe Moon and not Doge. So, I don't know. That's rough. Let's look at top news. See what the top news is. Top news. Bloomberg music is great. Right shift? What's right shift? All right, what do we got here? Manhattan retail rents extend slide. I mean, that doesn't surprise me. JP Morgan to add staff, shorten hours to improve work conditions. Oh, that's cute. I'm sure a lot of people would enjoy that. But companies, I feel like, say that, and then they still overwork everyone. LIBOR draw. Oh, let's look at the 10-year. Let's do that. There's really it seems like a lack of news as usual here. Yeah, it does look like we're tentatively having a what's it called? Recovery. So, but let's look at the 10-year quick. Yeah, don't be faked out by a Green Day. No kidding. All right, what's going on with the 10-year? Whoa, really? It's plummeting again. That's great news. That's excellent news. It is plummeting again. 1.55 right now. So that would mean that bond prices are falling. I'm sorry. They're increasing. As bond prices increase, the yield falls. So potentially more people fleeing to bonds, which that's a bullish sign. Look, the more we get this downtrend, that's it. LIBOR falls to record low with biggest tumble since March. So the day after I pay off my margin, which is denominated in LIBOR falls to record low with biggest tumble. See, it's because they don't have me paying interest anymore. They're like, that's it. Kevin's not paying interest anymore. He was paying so much. We're just gonna have to plummet the rates now. Oh yeah. But so what this means here, at least in my opinion, when you see Treasury yields plummet like this, which is what we're seeing happening. Can I get a trend here? So when we're seeing the yields drop in this direction, this is a sign that more people are buying bonds. More people buying bonds is a suggestion that they actually don't believe inflation will be worse than the levels at which they're buying the bonds. In other words, this is a good sign of lower inflation expectations. Ryan, I go pretty deep on the fundamental analysis. It just takes that options and fundamental analysis. Those sections, I just keep adding to those sections. We're talking about the stocks and psychology money course, link down below with that expiring coupon code. But there's a question here: how deep do I go into fundamental analysis? I go as deep as possible, just to show where do I get the data from? How do I build my spreadsheets? Why do I build my forecasts in a certain way? And then I do it with companies, whether it's Tesla or it's Square or it's Neo or it's Coinbase or whatever. And then we even compare. So it's fun. All right, what else here? What else do we have? So let's except we might get deflation. Deflation might be a reason why people would want to buy bonds at these levels. Let's go ahead and jump on over to the sticks here. Look at this. We've got a little bit of a move here to the upside in the market. It looks like we've got all of a sudden Playboy almost up 10%. Seems like there's a lot of momentum in Playboy. Like maybe it's the Martin misses. Make sure to get your life insurance in as little as 5 minutes via the link down below, or go to metkevin.com/life. There you go, Martin. You got it. He said he missed it. Okay, so shout out to Martin. All right, so Playboy is up 10%. One of the things to keep in mind is with all of these SPACs selling off, it makes you wonder if Playboy is just going through a sort of delayed euphoric cycle. So be aware of that. Look at what every single other SPAC has done relative to what the pattern is now with Playboy. So just be careful. ZOM up 7.8%. Wow, we're actually starting to rally here again. This is very interesting. Things are going much more green here. Every time we look away and come back, things are getting more green. Norwegian up 6.3% now. Upstart up 7% now. ZOM's up 8%. Playboy's up 7%. Fisker up 5%. Microvision up 4.5%. Luminar's jumping as well. Somebody was asking about LiDAR earlier today, and here you go. LiDAR's moving. Ethereum up, at 23.83. Nordstrom 4%. Bed Bath 4%. CRISPR almost 4%. NGA almost 4%. Rite Aid's 3.5-ish. Carnival Cruise Lines at 26.59, 3.39%. All of a sudden, we're getting green. Macy's up 2.5%. Oh my goodness. Dare I say it? EXPI is up. It's going to create tears in my eyes. That thing's been straight down for like 2 weeks. Palantir is up 2%. It's up over $22. Very Good Food Company up 2%. C3AI and Affirm are up. Enphase is up. Oh my goodness. We're actually seeing some green in this market now. Lemonade breaking off that 79. United Airlines, Shift, Twitter, IBM, Delta all up over 1% here. GameStop just at 0.9%, but also still green. Salesforce, Planet 13, Tattooed Chef turned green. It turned green. How great. Xpeng, Neo have turned green. Oh my goodness, what is happening? It's almost like things are recovering. The exception of Tesla. I haven't found Tesla. Where's Tesla? Tesla's trying to recover. Tesla's at 1.3 to the negative right now. It is on an uptrend, but it's pretty slow right now. Pretty slow uptrend. And you still got the SPACs in the toilet. Still down about 1 to 3% for a lot of the SPACs here. ChargePoint down 2.38%. Really, ChargePoint hit 19. I'm pretty sure that's it. I'm pretty sure 19 is lower than the low we saw in March. It is. It is. We have officially hit a new low for ChargePoint. It's incredible. Absolutely incredible. Ay. The green radiation suit, my rad suit. You like my rad suit from last April? That was fun. I like my rad suit too. All right, what else do we have here? What? This is interesting. U.S. poverty rate, the highest since the pandemic began. What? With all the, what?
How do you, is this a problem with defining poverty? Is that the problem here?
Well, I suppose it might be. You know, we're right now going through a time of some uncertainty, and there again, people are using data and whatnot.
I don't know if I believe that. I don't have to fact check that one. That's odd to me. Let's jump on over to Bloomberg.
Value stocks in the S&P 500. What next? And I think that really it gets more nuanced from here. So a lot of what we're seeing is that this value rotation is intact. I would stick with the idea that cyclicals are going to outperform defensives and value is going to outperform growth. I would also continue to press the small over large cap theme. I don't think
that's what Bank of America says.
The idea that the world is shifting from a very closed, stay at home, very defensive and tech oriented economy to a cyclical recovery, a services recovery, et cetera. My favorite sectors, financials, industrials, and energy. I think these are three ways to play the kind of the reopening.
So in other words, just go down the list and see what did well so far this year and say it's your favorite. Okay, sorry, I'm being really jaded. That's mean. I'm sorry. Arrival's up 8.5%. Very nice. Here's some comments about skills. Let's see, skills. Where is it? Oh, there it is, 14%. It's had a massive downtrend. Look at that downtrend. I mean, the thing is like plummeted to 1240. Right now it's at 1441. Nice move up though. Let's go back to the watch list here. Still looking like even Express just came to the top here. Looks like we are seeing lots of green candlesticks. A little bit of red there on ZOM, just at the end there. But CRISPR's still running. Invitae still running. MP Materials turning around. QuantumScape, okay. It's the return of the... Look, if QuantumScape goes green, it's the beginning of the return of the SPACs. When Quantum, I feel like, is the epitome of the SPAC movement. Oh, inflation talk. Hold on. Let's listen to this for a second.
That's nothing. Lumber futures contracts. If you're going to buy a housing, you're going to buy a home soon, a new home, you're going to notice this. That's up 280%. And copper, that's up by merely 80%. When you're looking at those very extreme commodity cost increases, you've got to expect at least the near-term increase by CPI inflation. The question is whether or not wages will begin to grow rapidly enough so as to sustain a further rise by price inflation going into 2022. Right now, the consensus says that's not going to be the case.
Got it. John Lonsky, thank you very much indeed, sir.
Yeah, I have to say I'm a little pissed that Doge has not gotten to $1 yet. We have the beard is riding on this. The beard rides on Doge going to $1. If it doesn't, it's got to go, which is very unfortunate and depressing. The trajectory was there, but we did see the technicals start falling apart on the run, unfortunately. So the warning signs existed. All right, what do we got over here?
TV shows and spin-offs and opportunities to create even more content. So
I don't really want to talk about Apple. Don't get me wrong, I like Apple. I got it. I saw the event. I'm good. Let's jump on over here.
Aggressively by a potential reversal in the corporate tax rate. So those are some of the headlines that I think could weigh on large cap companies. Meanwhile, small cap companies are still trading at a very deep discount to large caps. They're still, bigger beneficiaries of a lot of the macro forces that we see in play. So, I think, I'm not saying we're heading into a bear market, but I think we are ripe for a correction, a 10% pullback or thereabouts. 10% pullbacks are normal. They happen on average once a year. And right now, when I look at the S&P, everybody loves it. As you mentioned, I'm one of the lowest targets, and we're not really that far off from where we are right now in terms of, kind of a fair value approach. So I think that what we're seeing is just lofty sentiment, high multiples, potential for, kind of bad macro headlines as we approach the end of the year.
Yeah.
This all kind of weighs on markets. Yep.
I'm looking at the airline sector, and what really occurs to me is you've had this recovery trade, and now there's kind of this dawning realization that actually the recovery trade for U.S. airlines.
We did already have a 10% pullback. No kidding.
Around America right now, and you can go on vacation and you can do what you want, but you can't really go anywhere else. And I'm just wondering if we're starting to factor in as well the kind of dawning realization that this is going to take a while for the rest of the world to catch up, that the global economy is going to face scars, that there is going to be slower growth. America has roared back. Nobody else really has. Europe's just starting to play a little bit of catch up, but the rest of the world is way behind. And I'm just wondering whether that kind of realization is beginning to creep onto investors' radar screens.
It's a really good point. And I think that that's another reason to think about staying local and looking for more domestic themes. Again, if you think about small versus large, small has a much, much stronger tether to U.S. GDP rather than rest of world. And to your point, last year the U.S. was behind. This year we're ahead on COVID. I think it's a kind of a rapidly changing dynamic, but I think you're right. I think that a lot of these kind of homegrown U.S. themes like onshoring or financials is a very domestic U.S. sector that benefits from CapEx and benefits from better GDP in the U.S. I think these are some of the themes that could could continue to work as we move forward. Potentially that low quality value trade is behind.
I've actually thought about this as well, and we're going to go to the sticks over here, but somebody goes, is a British accent required to host this business channel? On Bloomberg, they all have that. You're right. It's funny. All right, let's go ahead and take a peek what's going on over here. So going back to the sticks, Playboy, 747, 766 now. NGA, nice bounce on NGA, 766. You're getting a little bit of a SPAC bounce here. Luminar up, Open Door up, Microvision up, all 5% here. CRISPR's almost 5%. Zom 4.77. Nordstrom 4.5. Bed Bath 4.5. Social Cap 4. Fisker good. It's good. You want to start seeing recovery. Voyager Digital up 3% right now. Very good. Affirm, Fuel Cell, XL Fleet, DNB. We've got C3AI, Palantir, Cheesecake, Marriott International, Zillow Group, Spirit. All these guys up about 1% to 2%. Really nice push here on NGA. Look at that run right here on NGA. Really, really pushing right now. Keeps candle sticking up here right now. Good recovery on the market right now. I like to see that. We've got what's still hurting. So a subscription base still hurting. And that's Peloton, Netflix, Tesla. These are the guys hurting right now. Etsy down a little bit. Churchill Capital, it's only down 0.7 right now. Not as bad as it was. 0.5% on Matterport. GameStop turned negative. But we're also not seeing the green candlesticks really coming through at Tesla or some of these others. Coinbase, kind of a little bit stuck. Let's go. Let's take a peek back here. NGA at 8.73 now. Nice movements here. Okay, let's go ahead and get back to what do we got? Lockheed Martin. No, let's go ahead and jump to the Fox.
at nothing.
Nothing. Okay, fine. We'll go to Bloomberg. They're all on commercial again. They're so annoying. That's fine. We'll go look at top news. 10-year Treasury at 1.57. Teeny tiny little uptick there. Going to top news. Get rid of this flashing around here. All right, let's see here. Netflix plunges, COVID rise. Let's look at that. Let's look at this COVID madness here for a moment around the world. Let's just do COVID cases, Japan. Let's just do a little bit of a brief look over here. So yeah, I mean, look at that. You're definitely seeing a resurgence here in Japan. Almost as it's trending back to what we had in January for Japan. Let's try like Germany, for example. Yeah, look at that. We're basically almost as high as we were in Germany now as we were in January, which is incredible. France, almost the same thing. Europe's just not doing good. Let's look at like Italy. Remember, Italy was Portugal's doing really well. Italy was like the first. Okay, they're downtrending. Russia, I don't know. Do we even bother looking? China, do we really bother looking? Russia, there's been so much talk about just total misreporting or underreporting of actual cases, but who knows? Let's look at India. India, oh my gosh, it's horrible. Yeah, that's pretty bad. I mean, they're doing a safe moon right now. They're at almost 300,000 new cases in a day right now. Yikes! It's incredible to see the COVID's still moving this way. Obviously, we got to get those vaccines rolled out for those wanting to take it. I don't know what kind of maps we might be able to get here. Oh yeah. Here, look at that worldwide cases. Asia Pacific. Look at that chart on Asia. It's going parabolic in the Asian region here. You've got Europe kind of flat high. U.S. trying to get down, not decelerating anymore here, but really worldwide. Worldwide and in Asia, we definitely still have those upticks. Oh, man. We got to get out of this mess. Get us out. Please, get us out. Yeah, herd immunity only growing. Yeah, that's the hope. ARK started buying Roblox again. DraftKings too. Newegg accepting Dogecoin. Yeah, I talked about that yesterday a bit. This is very true. All right. So going back to the sticks, we do have, let's see, Tesla stock. It's not moving up. Netflix also stuck. Etsy 1.53 to the downside. Matterport's almost green. Matterport's trying to break back out. Neo's pretty much flat right now. We've actually, honestly, for what started like a rough day, it's coming back a little bit here, which is nice to see. Very, very nice to see. Let's see here. What else do we have? All right. So where do you think most of the credit that has been created has gone? Asset purchase to stimulate consumer consumption or for business productivity to invest in small business? Personally, I'm guessing asset purchases is where a lot of this money has gone. Frugal decade. People aren't spending as much as we think that they would. A lot of that money is going into building wealth, so people can be on the wealth ride rather than on the oh crap, we're in a pandemic. I need a check ride. Okay, so Bloomberg is talking about police reform. CNBC is talking about Lockheed Martin. We've got Varnes talking about woke corporations. Oh, God, it's just this. What are we supposed to talk about here? And then I guess the sticks. So we're back to the sticks. Playboy 9.15%. NGA really rallying here, 8.88%. Voyager Dig up 8.6 right now. Was actually red this morning. Big U-turn there. We've got Upstart, Luminar, Sundial, Carnival, Macy's, these guys all moving to the upside right now, which is nice, really nice to see this sort of recovery, because this morning when we opened, I mean, things were red again, real red again. So it's nice to see some form of what looks like a pretty broad recovery here, with the exception of Tesla, of course. Tesla is sitting down at 706 right now. It's actually decelerating a bit, it's I should say accelerating to the downside is the correct way to say that. Currently at 706.5. So down arrow there on Tesla, Google, Etsy, Apple, Disney. The subscription service is getting beat today. Amazon, Neo. But a lot of the things that have been selling off are nicely showing a little bit of love right now. All right, what else we got here? Somebody says Sens is up. We've got, let's see. I'm not buying Safe Moon. Let's see. What else here? Yeah, this is a fake breakout. You still, it's a fake breakout. Am I happy? Are you still happy about selling off? I didn't sell off. If you look at the options I got, I am more exposed to stocks right now than I was beforehand. That's a big diff when you're taking on more risk, not less. Tesla had another fire incident. Really? Let's take a look. Tesla fire. Let's take a peek. Where'd you see that? I don't see that. Yeah, no, I don't see more of that. So, all right, perfect. So, yeah. Okay, there's nothing else going on, folks. Skills is up 12.67%. NGA is up 10.65%. CRISPR up. Lot of good movements here. Big digital assets, lots of good movements. So, okay, good. So I would say this is a good place to chillax for the day. Thank you very much for being here, folks. Appreciate y'all for coming, as usual. And we will see you in the very next live stream. Just make sure to go check out that coupon code down below for the programs on Building Your Wealth. Get lifetime access. We'll have our private live stream in about an hour. Thanks, everyone.